Hello, this is Vivien Sharon. Welcome to episode 2. On my first episode, we talked about the budget basics when you're buying a property. And today we're going to concentrate on some basic issues to do with mortgages and mortgage financing that I think you should know about. The mortgage rates. The mortgage rates can be either fixed, variable, or adjustable. You can have an open mortgage or a closed mortgage. A closed mortgage means that it has a fixed period of time and a fixed amount on a monthly basis, and that cannot be changed over the 25 years, let's say, amortization period. An open mortgage is usually more common and it's more flexible. It's open. There is no penalty. If you decide to move in the future, it would be very wise, much wiser, to have an open mortgage whereby you can change the terms, pay a small potential penalty for that. The general rule is 25 years for the length of the mortgage when you're buying a property. 25 years is the time span, and that is what it currently is. It used to always be 30, and in some cases it is 30 years, but the rule is 25. Conventional versus high ratio mortgage. What does that mean? A conventional mortgage is if you go to a bank advisor, you do the numbers, and you are able to put together enough cash for at least 20% or more of the purchase price. So that is a conventional mortgage. When you go to a high ratio loan to value mortgage, it means that you're going to be borrowing a lot more money, and it would be that you have cash for under 20% of the purchase price. So this is something that you need to determine when you do your budgeting, which I've said in my first episode. Budgeting is so important to have cash available so that your interest payments will be so much lower. Getting mortgage approval. When you're thinking of buying a home, it's really important, after you've done the basic budgeting, is to sit down with a mortgage advisor, a lender, and to go over the numbers. What you earn, what are your expenses, what is the type of property you can afford, and to do the numbers. That is extremely important and one of the first steps that you must do if you're thinking of buying a property. Now, since the beginning of the year, January 2018, in order to cut back on the debt of consumers, the Canadian government, through its auspices, has dictated that there's a 2% extra stress test. It doesn't mean that you will be paying more on a monthly basis, but it means you have to be able to qualify when the mortgage lenders and the bankers do the calculation. You have to be able to, at least on paper, be able to pay an extra 2% over and above the negotiated interest rate. So if you have an interest rate, a mortgage of 25 years, at 3%, you have to be able to qualify for 5%, even though you'll be paying 3%. Which means for some people, they won't be able to buy that house for $750,000. They'll have to scale it back to 20% less of a purchase price, because they won't be qualified to buy for $750,000, but qualified for $550,000 or $600,000. So don't go looking for a house that they can't afford. So one more thing before I wrap up. When you sit down with your real estate professional and a price is being negotiated for the purchase of a home, and if there is a condition based on financing in one offer, the second offer doesn't have that. They've already done their numbers. They already have a pre-mortgage approval, which I'm recommending you absolutely get. The offer that does not have any condition and have their financing in order, and they can waive the condition of financing, they will be definitely the offer that the seller will look at first. This is a summary of the type of mortgages you can get when you're out sitting with your mortgage lender, the amortization period, the high ratio mortgage, and the new rules of the stress test. So this gives you, I hope, a general overview. When you sit down, you do the numbers and you meet with a professional who can do the mortgage financing with you, and then you go shopping for a home and not before. On the next episode, we're going to talk about what is the household income. Is it one income? Is it two incomes? What are all the expenses on a monthly basis? And that way, before you even start shopping for a home, you know your numbers. That's the most important thing. So we'll check that out on the next episode, and I look forward to speaking to you then. Have a great day. Bye for now.